Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Wednesday, May the 22nd, 2013. We're looking at some various charts today, and the main thing we'll talk about was some structural situation that we're seeing develop, as well as some signals and some signs that we're sorting. So we'll look at this. Let's start off with the gold chart. And this one, as you can see, clearly in a downtrend. You have lower series of highs, lower series of lows. No question about what's going on here. The main thing here, we told you this was the first down leg of a massive move to the downside. We expect this to be taken out. We expect we'll see lower prices than we see here. So we're going to keep an eye on this level right here. Just draw yourself a little trend line right there. And then in this scenario here, we had this bounce. We told you this was not a real recovery or a bottom or anything like that. You're going to erase it. And that's exactly what happened. And at this point here, you see a new setup here. Now, typically when you have a scenario where you're selling off and you get these at the bottom of a sell-off, it calls for a bounce, and that may be the case here. That's not always the case. Sometimes they're signaling that this is another point to be selling at. You want to, of course, wait for confirmation. That's why it's a black arrow here that marked it here. But you'll know it if you can sell off the following day and close below this point here. If that happens, then you're actually breaking down. You're beginning the second leg, which basically we take this level here from this high point all the way down to this low point, and we duplicate that out from here down to the downside. So that's something we've been talking about for a while, and so I just want to bring it to your attention. If we're already short this position here, a lot of you guys may also be. If you aren't comfortable with a bounce, which could happen, you could also see a bounce here, come up here and fail at the 50-period moving average, that red line right here. That could happen as well. If you don't want to risk the gain that you have on the table, simply take your stop loss limit that's up here and move it on down here, right? That would just lock in your gain. If you bounce higher, great. You're just looking for another entry opportunity on the short side. Right now, though, I'm looking at this for a breakdown. That's the overall trend, and that's why I would lean in that direction. Have a quick glance here at silver. The same basic overall conditions with a little bit of variance here. You'll notice that you have the overall downtrend, lower series of highs, lower series of lows. But the main thing to point out here, you'll note that the low close here, and if you draw your little trend line like I was showing you on gold here, you've already down below that line. And more importantly, you've actually made a substantial move lower here over a weekend. So keep that in mind that you're already indicating the direction you're going. You've already got the peers and so forth and so on. Again, with the same setup forming here, you could still see a bounce. I'm not going to say it can't happen, but I'd be looking for this to move lower, because on the overall look at the oscillator, you can see that you're already up here bouncing off of the resistance line here that you're seeing about the 60 level, which is also indicating a bear market. And I've marked that on the chart here. But the main thing here is that I wouldn't expect now to see a massive move here. That would put this guy way up here, which hasn't happened thus far. We're more bearish than that. So again, I'm looking for this to break down. And when you see that confirmation lower close the following day, taking out this low point here, you also have a lower high. That would give another entry opportunity. If you miss this entry opportunity here, you'd have another one setting up there. Having a quick glance now at the Dow Jones Industrial Average. This is what is basically everybody's looking for. Very nice, big, fat shooting star. Something like this, I've talked about this in the past, they're more difficult. It tells you the same thing, but it's very small, very easy to get stopped out of something like that. It doesn't give you a lot of strength on the sell side, but it's still a signal, but it's just not as good as the larger one. The longer wick out of the top helps for traders, so that's important to note. We had a really good, strong sell signal today. We had that across the board on just any U.S. market. You were seeing that intraday. Now, at the end of the day, you started to see some of them change a little bit, but the main thing is that the market responded to the Fed's announcement where they're discussing when to end quantitative easing, or QE. And that's going to be a very important factor to keep an eye on, but it's not the only factor to keep an eye on. We have Europe that we have going on. We still have North Korea we have going on. We have interest rates that have been playing tricks on people lately, so that's important to note as well. And right now, I'm still looking at this market as a great sell opportunity. In fact, last night I was looking at one trade. I'm trying to put on the one trade on, and but I need a little more time before I can set that up. So I actually would like the market to bounce a little bit higher. Now, I know that sounds the opposite of what I typically say, but I'll show you in a minute what I'm up to. But right now, looking at this market to move to the upside, a lot of people have been talking about the fact that we see a situation like this high point here, a lower high here, and I'm like, okay, this is bearish divergence formation here. This is not sustainable. And then it come out and will go higher than we'd seen over here. And I'm like, well, that just erased your bearish divergence. It actually doesn't. You can have little setups like that happen. That's fine. What you have to look at is the longer term charts. If you go to the free website at PerfectStockAlert.com, you can find my short-term and my long-term charts, and I update them nightly. The long-term charts are showing a massive bearish divergence that is not going away. It's very important. You're seeing that on many of your global markets, and that's more important. It has more data in the long-term chart than a short-term chart. So again, that's something to keep an eye on whenever you're, at least once a week, go look at your long-term charts. Still on the short-term charts, we had the bearish divergence we talked about back when it was forming here. We're still seeing the same thing here. We got an intraday high point, so you wouldn't have been shorting from this point here. That never would have happened. But you can look at this now if you get confirmation and start taking it there. Again, I just like to see a little more push to the upside, even a little test of the high or something before we actually start to roll over, but you may not get that. Quick glance here at the NASDAQ. You can see the intraday activity basically changed this candlestick formation. We had a shooting star formation, and then we sold off even further and then bounced back up. So we're seeing continuation to the downside here, but not really all that strong. It is strong comparative to the previous day's candlesticks. That's important to note that this entire rally up here is nothing more than small investors trying to make free money and computer trading. So you can see this candlestick is very, very small. And then one down day erases 5 up days. I mean, that's a kind of situation you have here. And this isn't even a very large down day. So it's important to note that this move to the upside here is not supported by anything. There's no major buy pressure behind this rally. I've heard people talking about this new bull market. It's not a bull market. It's the Fed stimulating the markets higher. And that's why when we discuss the concept of them stepping out, the markets quickly reverse the trend. We have come down and filled this low volume gap here. We've had several below us as well, so we could still see another one. And then we could also see another gap form right here. The following day, we just gap up and start to move higher like we've been seeing in the past. I'd actually kind of like that. I want it to get nice and overextended. I'm trying to set up another trade, so I'd like to buy a little more time, but I may not have that opportunity. The main thing here, when you look at these charts, if you scroll on down, you look at the volume. The volume is very telling on the actual activity that's going on. You can see that we have substantial sell pressure as is developing here. Note this high point here, higher than the previous one here, and it's again towers above all the buy pressure. So again, the real trade here, the one that I'm trying to time perfectly, would be the actual sell trade. There's markets go up, and then what happens? Markets go down. That's just how the market trades. So you want to get ahead of the next move. Yes, this move has made a nice move to the upside. You've made money in that. Now anticipate what's coming next. Trade for that. That's what I'm doing here. Moving further down, looking at the MACD, you can see we're tightening up, converging here on the averages, and that's important to note as well. Cross of those, you get yourself a little bearish signal as well. Another one of those methods people use for timing their entry opportunity on the sell side when they cross the other side, and they're getting closer here. Also note momentum to the upside can be indicated here by the histogram, and it's pointing down. So price continue to move higher while momentum rolls over. It's not likely to be sustainable, so you can keep an eye on it. Looking now at the Russell 2000 Small Cap Index, this is where I really want to be. I'm starting to set up a trade on this right now, and I'll probably update the website to provide a portfolio to show some options trading that I'm doing here. And the Russell 2000 is very volatile, especially when the markets collapse substantially, so this is important to me to take advantage of this maneuver here. What we have going on, and we could still see this happen again, you have this low point here, we bounce up here, we fail, we go lower, taking out the low, okay, and we bounce up here again, we get one down day, and then we reverse, we get one down day, we reverse, we get one down day, we may reverse again. That's what I'm hoping for, actually. Even though I'm bearish, I'm still hoping for it a little more time to the upside. We've actually not come down here and tested this low yet. We have a low volume gap here, low volume gap here, here, and here. Lots of trouble here, indicating that all of this is going to be erased. The longer term, I should say short term, ultimate oscillator, high point here, lower high, lower high, lower high. You can see this entire rally here is suspect. And according to this, the bearish divergence is not sustainable. It's going to be erased. That means all of this gets erased. So I want to take advantage of that trade. There are many different ways that you can do that. You could go out and find an individual company that you think that is just benefiting from a rising tide lifts all boats kind of scenario, where you're looking at the Russell and you pick out one company that you think is in trouble when the market crashes. That could be done. It's a little bit harder to do that because you have to anticipate the news for the markets as well as the news that may come out for the individual company. So another way would be to look at ETFs that track the Russell, and then something like FOS or something like that if you're bullish. But what I'm looking to do here is something a little bit different. I'm going to be using options or puts betting against FAS. So That's what I'm trying to set up right now, and it's a rather large position. I'm looking for a big move here, so it's something that I'm going to be needing a couple more days to set up there, and that's why I have this bias where I'd like to see a little more bounce to the upside. But again, it doesn't have to happen just because that's what I want. Doesn't mean it's going to get it right. We've already got all the signs on the market telling us that this is a problem chart and it's going to be erased, so I wouldn't be trusting it on the long side. Looking now at the S&P 500 Large Cap Index, the same basic overall story. You had a massive move to the upside here. We took out this low here, we made a lower low, and we had a massive move to the upside, and we've not tested that. You have to test in order to know. Basically, the concept here is when the Fed steps out, how much of this rally was actual buyers really wanting to get invested with the markets, or how much of it was just Fed manipulated. Personally, I believe all of this is Fed manipulation, and so we're going to see a test of that. And that test will mean you come down here and you either find a higher series of highs, low points, so you have a low point here and a higher low here, or you don't, and you simply go lower. At that point in time, you start to break down substantially. You may see a bounce after that low point taken out, and then you'll have a series of lower highs and lower lows and so forth and so on. It's something that's developing right in front of you right now. It's a very important trade developing here. And with the sell signal forming here, it's also indicating the same thing. You should be looking for this to peak out. The same thing indicated by the ultimate oscillator, bearish divergence formation here. And then again, if you look at the volume on the SPX, you can see a substantial move here on the sell side. And you've been seeing that for a while. You'll also notice the MACD start to contract here, looking for that cross, and that's important. All these signs are typical. If you're a technical trader, you're looking for these kind of signs after a massive run-up to tell you, okay, I'm getting out a long trade, and I'm getting on the short position, looking for some kind of a change here. And again, the Fed in the U.S. is not the only issue that we have going on that could actually bring these markets much lower. So keep your mind open, okay? If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. Also, if you're looking for those short-term or long-term charts that I update every single night, you can go right here under the market chart section, and you will find them, as well as my stop-loss limits and entry signals and so forth and so on, okay? God bless, take care, and I'll see you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.